Well, welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. In negotiating the valuation, the investor can use current market comps or comparables to set the initial price. By looking at companies in the same sector and stage, one can find the range of valuations. From there, the investor can raise the valuation based on the values the startup has built already and lower it for the risk remaining. Investors typically look for 20 to 25% of the equity for each raise. The investor can adjust the valuation depending upon how much the company is seeking. Other factors that can change the valuation include recent changes in market growth. Has the market growth changed? Or competition? Has the competitive landscape changed? Also, by applying the current valuation to the fundraise, the investors can see if it is still in line with the longer-term roadmap of fundraising. It's important to ensure the startup doesn't set the valuation too high on this round, as it may prove difficult to raise a follow-on round at the next valuation. Market comps give the investor a starting point, but other factors must be considered. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start us into today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.